This is a FlippingJunkie podcast, episode 37. Welcome to the FlippingJunkie podcast. My name is Danny Johnson, former software developer turned house flipper, flipping hundreds of houses. Each week, we bring you interviews, strategies, stories, and motivation to help you get started flipping houses and on your way to becoming your own boss and achieving financial freedom. Thanks for spending time with me today. Now let's get to it. I hope you had a great week. We've got another great podcast episode here for you on the FlippingJunkie podcast. Of course, we're in the middle of this series of podcasts that will probably span over a year, I think, with basically going from the beginning of foundation mindset, working through how to find deals, how to analyze deals and put the deals together, all that kind of stuff. Right now, we're currently in the funding part of it where we've talked to some people about setting up joint ventures and using private money and things like that. Today, we're going to be talking about hard money, and I've got a friend, Chris Jameson, on the podcast, and we're going to talk about hard money lenders, what you need to know. That's the topic for this week. It's going to be a great episode. Just a little bit about Chris. He started investing in San Antonio real estate market back in 2011, and he soon after entered into the private financing market. He's facilitated over $60 million in loans and has acquired over 60 units for his personal portfolio. So he knows what he's talking about when it comes to lending and hard money lending. So this promises to be a great episode. Thank you for listening to the podcast. I know you've got several options, so I do really personally appreciate you listening to this one. I've been getting a lot of emails and things from people talking about how much they're enjoying the series and the podcast. So thank you very much for all those. And for all the people leaving great reviews on iTunes. Very, very much appreciate it. It really helps out and makes it worthwhile to know that I'm reaching people and helping people get started and to improve their house flipping businesses. So thank you very much for that. Just a little promotional message here for our for our Lead Propeller real estate investor websites. Check out leadpropeller.com. These websites are based on all the experience that I've had actually, flipping houses over the last, it's been 13 years now, and generating thousands of leads online. Of course, I'm an active house flipper. We're looking at trying to do 100 flips this year, so we're very active investors, not just saying that we've flipped in the past and stuff like that. We're active investors and use these websites to generate leads for our business, and the majority of our leads do come from our website still. So I'm generating about 75% of my leads do come from my real estate investor website, and you can have one just like it. You can set up and choose your template and edit it very simply from our custom editor that we've built within Lead Propeller. And these sites are set up for conversion. So, we've done a lot of testing. We've done a lot of playing around with what works and what doesn't, and the best messages to use, all that kind of stuff. So you're getting a lot of experience and years of experience generating leads online in those websites. So check out leadpropeller.com. And here we go with the episode. Thanks for listening. All right, Chris, thanks for joining us on the podcast.
Yeah, thanks for having me, Dan.
Great. So you staying dry? We've had so much rain in Texas over this last...
it's been pretty bad up here as well. So I think, San Antonio, I'm up here in Dallas. It's been hit pretty hard over the past week, so trying to stay dry.
Yeah, it sounds like Houston's getting it the worst, though. I think they've got most flooding out there.
Yeah, pretty bad out there.
But so for people listening, do you want to give a little bit of background about yourself and your real estate background?
Yeah, sure. So my story kind of started when I was a junior in college, and I was deployed to go to Iraq. I was in the Navy Reserves, and on my deployment, someone recommended that I read Rich Dad Poor Dad. So I read that book, and this was spring 2008. So read that book and started to see the collapse of the market. So I saw a lot of people overseas that were losing their pensions, retirement funds. Everything was just going up in flames, and I started reading a bunch of other books to kind of get educated on real estate. I thought that was a good strategy to get into. So did a lot of Rich Dad stuff. Ended up going back to college. I bought my first two houses when I was a senior in college, finished, and then went and spent a year in Afghanistan. When I was in Afghanistan, my wife got stationed in San Antonio. She was in the Air Force, so I knew that San Antonio was where I was going to go back to, so I wanted to start investing in San Antonio. So my downtime overseas, I spent a lot of time researching acquisitions and how to find properties, buy properties, financing, all that kind of stuff. And believe it or not, I took a lot of notes off of your blog, FlippingJunkie. I think I still have a legal pad that's full of scribbles and notes from, front to back on everything from driving for dollars and finding properties and overgrown grass and red tags and
that's awesome.
All kinds of stuff. I think a lot of informative material that you had on the blog was, really, really great for me because, going back, I wanted to buy direct. I wanted to go straight into, real estate investing, acquisitions, and, really hit the ground running. So that blog was very helpful for me. So I went back to San Antonio, and the one piece I didn't have was financing. I didn't understand financing. So, I started in the hard money lending business in 2011 when I got back from Afghanistan. At the same time, I started buying houses. So I think I bought owner finance. I sold owner finance. I've done flips. I've done rentals, wholesale deals, one apartment deal. I've done transactional funding, assignments, double closes, triple closes. I bought with cash, hard money, private money, and even partners.
Wow, so you've done pretty much gone through everything, really, in the years that you've been doing it.
Yeah, it's been about 5 years, and what I enjoy the most right now in this market is buying houses, obviously, buying properties, and then doing, hard money loans. But like you mentioned, I think, in the beginning, I've done, facilitated $60 million in hard money loans, and I've bought 60 units from our personal portfolio. So buying properties and doing hard money loans is what I'm specializing in right now.
Awesome. So let's just get right into the talk about hard money lending. And for any new people out there, maybe that just have a rough idea of what it is, you want to explain a little bit more of what a hard money lender actually is?
Yeah, so a hard money lender is mostly asset-based. It's not hard to get. A hard money loan is a loan on a hard asset. So that's, the term hard. It's a short-term, high-risk, high-cost loan. So typically it's too risky for traditional banks, and it's short-term. People that are buying distressed properties that need to be rehabbed or they have to close quick is essentially when you would use hard money. So to offset the risk of being a distressed property, there's higher fees involved. So it can be extremely beneficial if used correctly because it is a fast process. It's easy. You can make stronger offers because you can close quicker. You can buy wholesale deals because most of those time frames are 7 to 10 day closing, and hard money lenders are a reliable source of a lot of money. So unless you've got private lenders out there that have $5 million, $10 million, $15 million pockets, tying in a hard money lender could be beneficial to you.
Right, absolutely. And so I guess that's what pretty much makes it better than trying to get traditional financing. Some people, looking to get in flipping and thinking, well, I need to buy a house, so I better go to a bank and see if I can scrape together enough for down payment and see if they'll fund the deal and have to jump through all the hoops of appraisals and everything else. So what else makes hard money lending, better than sort of that traditional route?
So the biggest thing is just the speed of transaction. You can close with a hard money loan. We've done it in a matter of 1 to 2 days before. You just can't do that with traditional financing. Most of the time, conventional financing, you're 30 to 45 days, and that's if the property is not highly distressed. Foundation, roof, mechanical, structural problems like that, won't even qualify for traditional financing.
Right. And what kinds of things do you guys typically, and I'm going to say you guys because, and if that's a little bit different than maybe what you've heard from most other hard money lenders, maybe you can talk about that. But what do you guys typically require from a borrower for a loan? So if somebody's got a house under contract, it's their first deal they've ever done, they've got it under contract for a good price, and they bring it to you, what's the sort of process for that?
Yeah, so it all depends on the exit strategy. So we want to make sure that people can get out of our loans before they ever get in them. So if you're going to flip a property, we want to make sure that you have adequate reserves to close on the property, to have holding costs, and worst case scenario, something comes up on the back end, and say, for example, you've got to put a new roof on it prior to selling it. You want to make sure you have all those funds to be able to get out of the deal before you get in it.
Yeah, that's great to know, because I've heard of cases where people have gotten a loan, and even for just like 6 months, I think, and didn't borrow enough, didn't have any reserves, and things came up, and the property didn't sell in time, and then ended up losing all of their hard work to the lender, who ended up getting the rehabbed property. So.
Yeah, and these days hard money lenders are a dime a dozen. There's so many people trying to get into the industry. People are, using lines of credit. Some, anywhere from $50,000 to $100,000. People are using credit cards to try to be hard money lenders. People are brokering loans using IRA money. There's so many people that are trying to get into it. Really working with a hard money lender that knows what they're doing and has a track record and actually has the funds to close is going to be very important. So it's easy to get a loan, and one of my mentors tells me this all the time. It's easy to buy. Right? You can buy anything. It's easy to buy. It's hard to buy right and to execute. So we don't have a problem turning down loans. In fact, I think last week we turned down one where they were going to lose money. They thought the value was higher. They underbid the rehab, and they were going to lose money on the deal. So we turned it down. They went to another lender, and the lender knew that they're going to lose money, but the lender's always in a good position because they're loaning 70%.
Right. Right. So that's a great point, especially for new people, I think, because having somebody like yourself that will sort of guide them, it's almost a little bit of a coaching to say, hey, we wouldn't lend on this because we wouldn't do this deal ourselves, and maybe you shouldn't, and have because if somebody's new, sometimes that they're tempted to do a deal that's really thin and they're very optimistic, and you can help sort of show them the reality of the situation based on your experience in the business.
Yeah, in this market, wholesalers are having to pay more to acquire properties, so they're selling for more. People are, there's higher demand, so prices are going up, margins are going down, and if you're buying properties 80, 85 cents on the dollar, you're fighting to break even. So, you have to make sure that you buy right. We analyze deals or run comps. We're not loan to own, and we're very experienced in what we do. So, our best interest is making sure that the borrower has a successful transaction so they can come back and do it again, because we make money on our fees.
Wow, I like that. You quickly in there said we're not loan to own. I hadn't heard that before. I really like that. I guess that's the terminology for, lending with the expectation to get the property back.
Right.
Is that right? Yeah, okay. And so so back to the maybe a situation where John has a house under contract that he's going to flip. So he plans to flip the house. He's going to spend 2 months on rehab and then put it up for sale with an agent and get it sold. What's the process? If he gives you a call, where does it start, and what's the conversation?
Yeah, so first it's, talk to John, get his exit strategy, make sure it's, make sure it's a real deal, that it's good, that he's going to make money on it. We'll get the loan application. We'll run credit. We're not credit-based. It's asset-based, but we need to verify some things in the credit history, like not having 12 late mortgage payments, something like that. We need to get a detailed rehab bid. Then we'll need property insurance, title contact information to set up the closing, and 2 months of bank statements.
All right, and the bank statements were for if John has an entity, or just for John himself?
So either. So you can do either personal or in an entity. We want to see the bank statements for liquidity, again, to make sure that he has enough money to close into the deal, to get through the deal and get out of the deal, worst case scenario.
Okay. Is there a certain amount that you're looking for? Is there some kind of, or is it based on sort of the amount that you're loaning? So if he's getting, maybe an $80,000 loan, is there a certain sort of number you're looking for in those bank statements?
So in this market, it's going to depend on how well you buy. So say you're buying right at 70%, That means that your purchase plus your rehab is 70% of the after repaired value, the ARV. We would look for 10 to 15,000 in reserves in that situation, and then the higher you get in your all-in costs would be the more funds that we require to see prior to closing. So in this market, it's typically about 20,000.
Okay, and it makes sense. I mean, it's really, if you're going to get into rehabbing, it's smart to have that money. So if you say, well, I don't have that money, but I want to rehab, you better make sure that your numbers are spot on and that you can handle the rehab and get it done without losing money, because there's a real, problem with people that don't understand how much is actually costing, that rehab is costing them per day. And if you don't know what that number is, you can be surprised after 6 months. And after 6% realtor commissions selling plus closing cost assistance, et cetera, for your buyer, you can find out that what you thought was a $15,000 profit at the end turns into, an expense of $5,000 or something.
Right. Yeah, you have to make sure you understand the true cost of the deal. I think maybe once ever rehab has came in under budget out of all the loans that we've done. So making sure you have a good, accurate budget is important. And then also understanding your true holding costs, your true buying costs, and your true selling costs, so you can really determine what your profit's going to be.
Great. So when they bring in that detailed rehab estimate, I'm assuming they're getting that from a contractor. Is that right?
Yeah, most of the time. We also have a rehab sheet that we can provide that kind of breaks down, X square footage for flooring at $350 a square foot for tile, something like that. It kind of breaks down in 2 pages, interior and exterior. Yeah. So it doesn't necessarily have to be from a contractor. We do require a foundation estimate from a foundation company if there is foundation work. But yeah, it can either be a GC bid or something that you put together, as long as it's detailed.
Yeah. Would you mind sharing that repair estimate sheet?
Yeah, I'll send that over.
Oh, awesome. Yeah, and I'll provide that on the show notes page for people at flippingjunkie.com/37. flippingjunkie.com/37. I really appreciate that, because that helps people get an idea too of the cost of rehabs. And
yeah, this was a rehab sheet that I put together when I was buying in San Antonio, and I was subbing out all the work. So I would run my crews and do my estimates based on this when I was buying direct from sellers.
Awesome. So if they bring that in, they've got the estimate. Do you ever go out and actually need to look at the property, or what's the process there?
No, so we do an appraisal. We do third-party appraisals. We don't do anything in-house. We want to make sure that the value really is what the value is. It's not something that's inflated or pushed to get a deal done. So there's not necessarily an inspection, but we just do an appraisal to make sure we get the pictures, the true comps, the accurate measurement of the square footage, everything like that.
All right, great. So that saves time too, I guess, with the and hassle of trying to schedule, especially if there's somebody living in the house, the owner's still living there or something.
Right.
All right. So, how does this work for somebody that's maybe they've done a loan with you, it worked out great, and they're doing a second one? Is there anything that sort of speeds up in the process over time when you've done several deals with somebody?
Yeah, so there's, you just have to fill out the application once. You'll send in updated bank statements, and that's pretty much it. The contract that you have to buy the property, the rehab bid, and then the same process. So a lot of people use the same insurance companies, so it's easy communicating back and forth to get the insurance policy. A lot of people use the same title company, so we're used to working with, several down in San Antonio and Dallas and other markets. So it speeds up the process because a lot of it's just familiar. Mm-hmm. So a lot of things that are done over time, and we put a lot of work into our infrastructure, technology, and processes. So a lot of things are done automatically through email. Kind of speeds up the process as well.
Great. And so I wanted to go back. I meant to bring this up before when we were talking about sort of the benefits of a hard money lender, and the first thing that we talked about with regards to that was just, someone sort of experienced watching out for you if you're newer in this business and telling you like that's not a good deal, that is a good deal. How do you analyze these deals? Like, what are the ones that you're looking for? Is it always the 70%, or do you guys have other criteria that you use for certain properties?
Yeah, so again, depending on the exit strategy, if it's a flip, it's going to depend on the price point as well. So you can make money on an 80% deal if you're doing a $300,000 flip, as opposed to 80% deal on a $100,000 property. Your fixed costs are just going to be so high it's going to eat up most of your profit. And then for rental properties, we do a lot of loans for people that acquire properties, use a hard money loan to stabilize it, fix it up, and then go and turn it into a rental property, refinance out into a 30-year mortgage. So those people are willing to pay 85% in some cases because they're buying for cash flow, not for quick profit.
All right, and so, and what are the other benefits to people? So you had said that you have title companies and things like that you guys have worked with, and I'm sure a lot of repeat business through them. So if somebody's new in this business, is it another thing that you guys would provide as sort of guidance with where to close properties, who to close with, and different things like that?
People that are familiar working with investors, both on the title company side, the insurance side. We work a lot with wholesalers, local wholesalers as well, that bring deals. So we're analyzing a lot of that stuff as they're sent out, either pocket listings or email blasts. We work a lot with those guys, so we can help bring wholesale deals to our borrowers. We don't increase fees. We don't do anything. We don't add in any kind of profit from the wholesaler to the borrower. Essentially, we're just trying to connect the dots.
Right.
Just make going back to what I said before, we're just trying to create a good customer experience so that borrower will come back and do business again.
Right. So that's a great point of view to have. It's just like somebody else on your team that even could bring you deals. I mean, that's awesome. Bring you deals, and then if they're bringing you the deal, obviously they're already interested in lending on it, right?
Yeah, exactly.
Right. So that's pretty cool. So if you see it coming from them, they're experienced. And, like Chris is not a loan to own. So when you get stuff like that coming through, you can count on it being a pretty good deal. Obviously people can make mistakes and a lot of it's on how you execute. But, if they're bringing it to you, they know that they would be able to do well with it. And you should be able to too if you are focused on doing the right thing with the rehabs. And so you guys loan throughout Texas, right? For now, are you going to be expanding?
Yeah. So for now, we're doing everything in Texas. We're debating on either, getting more aggressive in the markets that we're in, or expanding outside of Texas. So we're kind of going back and forth on that right now. There's still a lot to capture, I think, within Texas, and like I said before, as well, there's a lot of people trying to get into the market as hard money lenders. So, us relying on our technology and speed of transaction, I think when the market does turn, we'll be in a situation that we can capture, all of the little guys that have tried to get into the business. We can capture that market as well. So we're kind of right at that junction where. We're either going to stay in Texas and specialize more and go after more market share, or expand into other markets.
All right. So for people listening, because I do have, the majority of listeners are actually outside of Texas. Do you have any advice on how they should, what they should do to find some good hard money lenders?
Yeah, my advice, just personally as an investor, is to find someone local. Someone local with a good track record. Reach out to people that have used that lender before. Get involved with your local groups, RIAs, your mentor groups, things like that. And some questions you want to, ask or find out about the hard money lender, the loan to own thing. You want to know their experience, how many deals that they've done. You really want to understand the draw process, because some lenders will be very controlling in that aspect and maybe only allow 1 or 2 draws. So hidden fees. So a lot of people that are out there shopping ask, what are your points and what is your rate? So hard money is a very competitive business. Rates float between 12 to 14% for the most part, and points are 2 to 4. So what people don't ask is, what are your other fees? A lot of times, hard money lenders will throw in, junk fees that make that loan, 14 and 4, 14 and 5 in some markets. Right. So not understanding what the hidden fees are, the junk fees and penalties, I think is something that a lot of people don't ask, especially new people. And then the other thing is asking if they charge money on escrowed funds. So what that means is, say you've got $25,000 that you're using for rehab, and that money is set aside in escrow at closing. If they are charging on that $25,000, it's like them borrowing your money, charging you interest on it, and then most of the time they're loaning that out to another investor at 12 to 14%. So they're charging you 12 to 14% on your money that you haven't used, and then they're charging someone else 12 to 14% using your money.
Right. So you want to make sure that if they're withholding rehab funds in escrow, that they're not charging you interest for that amount.
Yeah, because that can be a phantom, $300 to $600 a month during that process, during that rehab process.
Right. So that's awesome. So any other tips on questions or things to find out about that maybe a lot of people aren't aware of that they should be asking?
Prepayment penalties. A lot of lenders in Austin right now have prepayment penalties. So, 3 months, 6 months, they'll charge you a point or two if you exit out of the loan too fast. A lot of institutional lenders have that as well because they want their money to sit there and earn interest for a longer period of time. So if it doesn't go as long as they would like, they're going to penalize you for being too fast. And then the loan to value. So plenty of lenders will do 70%. Different markets might be 60 to 65. In Texas, most of them do 70%. So you want to make sure and ask if they require any kind of down payment, 10%, X dollars, anything like that. Because hard money really is made to minimize out of pocket. So if you're buying right, we do several loans a month where people are bringing less than $5,000 to the closing table and making $20,000, $25,000 when they sell the property. So they're making 500% returns, right, as long as they're buying right.
Oh, that's awesome. And what about loan extensions? Do you guys typically, have where maybe a point for like 6 months extension or anything like that? What about extensions?
Yeah, so we do a 12-month term. It is a point to extend after that first year. It's a point every 3 months, as long as there's communication. For example, if you bought a house, you rehabbed it with minimal work, it's overpriced, and it's been sitting on the market for 9 months, and you haven't been communicating, or maybe your payments are coming in just a little bit late every month, there's not incentive for us to just continue to let that property sit. You're not price dropping. You're not trying to sell it. That might be a situation where we don't extend. Mm-hmm. But really, that's our failure up front, to not educate and help people along the way. We haven't had that process. We haven't had that situation come up yet. So for the most part, we're extending after the 12-month period. But really, our job is to make sure that you get in and get out as fast as possible. Again, you make money faster. Time is money. You can come back, find another deal. We'll make our points. You make more money when you sell it. Continue to do that process. We don't want to have someone out there that has a loan for 2 years. That doesn't help anybody.
Yeah, and the way the market's been in most of the country lately, it's kind of strange to have a property that you would have for over 12 months. I mean, what are you finding in Texas with you guys where you're lending, the typical time frame for these loans? Yeah,
our average right now is about 4 months.
Yeah.
So that's from close to close, either buy and flip or buy and refi. So buy and refi is a little bit faster. It's probably 2 to 3, and then flipping is probably probably 3 to 5.
All right. So yeah, that shows the strength of things. Have you noticed that holding steady or it being a little bit longer, or is it you see any change in that lately?
No, for the most part, it's been pretty consistent. I think the biggest factor that changes that is the size of the rehab. So most of the time, if you've got, mostly cosmetic, maybe a little bit of foundation work, you're looking at about a $20,000 to $30,000 rehab. Most of the time, you can get that done in about 4 to 6 weeks. So you close 6-week rehab, list it. Most everything, at least in Dallas right now, and a lot in San Antonio, is, if done correctly, is selling within the first 10 days. Right. So, and then it takes 30 to 45 days to close.
Right.
So most of the time, we're still with successful people that know what they're doing. If the major comes up on the rehab, they're closing flips in 3 to 4 months. I think the last one we did up here in Dallas personally, we closed in 47 days from close to close.
Nice. So do you find you get any pushback from people maybe that price it a little bit high and it's not selling like that within that first 10 days? Do you try to advise them on, hey, maybe it's priced a little bit too high if you haven't received any offers, that kind of thing?
Yeah. I'm going through that situation right now with one borrower. I think they listed it significantly higher than market and then took a drastic price drop. That just puts up red flags to everybody that something's wrong with the property. So you list it $50,000 higher, $50,000 higher than market value, and then drop it $50,000. People immediately think something's wrong with it. So overpricing it can be detrimental to your flipping business.
Yeah, definitely, because I know that temptation is there. Like, you do a great job with the rehab, and you're thinking, wow, I bet I could get 10,000 more than I thought. And, you're sort of attached to it a little bit, and, it's that thing can be tempting. So do you feel like that? Yeah, I guess, but you said you don't really see that often, right?
Yeah, most of the time when that happens, it's because, what you just mentioned, or rehab went over budget 10,000, so they think they can make that up on the backside.
Oh yeah.
Most of the time, it doesn't quite work out that way, but thankfully, we're in a seller's market, and prices are, selling for a little bit above list price most of the time.
Now, what about level of rehab? Do you find you're ever having to coach people on sort of not over rehabbing properties?
Yeah, correct. Yeah, not under rehabbing or over rehabbing. So most of the time, you want to be comparable with what's common in the specific subdivision. So, we run comps and kind of get an idea of what is selling at the top of the market in the subdivision, what kind of rental grade, what you can get away with, to not over rehab it. A lot of people just watch too much HGTV and think they can just move walls and move bathrooms and keep everything within budget. And realistically, a lot of time in Texas, it's just not necessary.
Right. Yeah, you might be amazed sometimes if you do, run comps and look at neighborhoods, what other houses are for sale. It's not that hard to outdo them, and you don't have to go crazy. And like you said, you don't go in there and build a bunch of or built-ins and, do the beam ceilings, all that kind of stuff is just, good for TV, but most of the price ranges investors work in, that doesn't make a whole lot of sense.
Right. It's good for entertainment. It's good to see someone else do it. But, tying a little bit with the TV comments, a lot of people believe that these numbers they see on TV are real when they're doing gross profit and not factoring in any kind of buying costs, holding costs, and, minimal selling costs. So, again, I've got a calculator that I put together that kind of, details everything all the way from holding costs to maintaining the yard, utilities, selling costs, inspection repairs, home warranty. It goes down pretty detailed, so you can really get a good idea of what those true costs are going to be, so you can see your true profit.
Awesome. And where can people find that? Is that something we could put the link on the show notes page for?
Yep, I'll send that to you as well.
Awesome. Yeah. So, and you've got that, and then you also sent me some other things. It's really awesome. Chris really cares about helping people with information and getting some stuff out there. So another thing that he sent to me was a hard money lender checklist, and that has different items to run down for the process here. So he's got get pre-qualified, offer accepted, loan processing needs, loan underwriting process, draw request, inspection process. Very detailed. So I'll definitely make that available also on the show notes page at flippingjunkie.com/37. And then you have a hard money lending exposed PDF here. Do you want to explain what that has on it?
Yeah, so these are just common questions to ask a hard money lender, regardless of what market you're in. These are things that I mentioned before, like charging interest on escrowed funds, experience level, if they're buying personally or not, hidden fees, things like that, just to ask, just to have awareness, especially people that are new. It's kind of a lack of information. They make buying decisions and borrowing decisions with a lack of information. So understanding exactly what you're doing it is advantageous. So, putting this stuff together, it's a quick read, really to know what you're getting yourself into, because this is a very competitive market right now. Like I said, margins are getting smaller. So reading the fine print and knowing what you're getting yourself into before you make that decision, because these are hundreds of thousands of dollars, worth of assets and liabilities that you're responsible for. So I'm just trying to do what I can to help people not lose money, because I've never lost money on a deal myself. I'm going to make sure other people don't.
Awesome. So people, you can find and download those on flippingjunkie.com/37. I wanted to also ask you, because being that you've been in the business for a while and probably have seen quite a few things, do you have any interesting stories about deals or borrowers that you wouldn't mind sharing with us?
Interesting stories.
Yeah.
So
I probably should have let you know I was going to ask that beforehand. It's always kind of hard.
Yeah, there have been several. Interesting. Let's see. So I guess one deal personally, going into a historic downtown San Antonio property that, going into the deal looked absolutely fantastic. It was like a 1910 house, traditional, historical, great looking house, good bones, a lot of potential. Yeah. So we're looking like 375, 400 ARV, and San Antonio that can buy you a lot. Mm-hmm. So a lot meaning a big house, especially some areas of downtown. So this was in La Vaca. So going into it, everything looked great. Numbers looked fantastic, and we get into it. Rehab was quoted at 120. We factored in 6 months for holding costs. It looked like we were going to make a six-figure profit on it. So, we missed things on rehab. We opened up walls. Things changed. Things get added. Inspection, permits, all that kind of stuff.
Can I guess how much it went?
Yeah, it's a 12-month process. We were just shy of 12 months. We paid, at that time, we were using a hard money lender that did 6-month loan with a point extension every 3 months. So our holding costs went through the roof. Our rehab went from 120 to 180.
Wow.
And this amazing looking, marble floor, hardwood floors, custom surround, custom cabinets, fantastic looking house. We ended up making $4,000.
Oh no. That's hard.
So my advice would be stick to easy, simpler type rehabs and try to stay within 25% of the median sales price in your area. So in San Antonio, I think the median sales price is like 200. So try to stay between like 150 and 250 on your ARV.
Right. Yeah, and it's always shocking to hear that for San Antonio. Even 200 is shocking to me because, I remember the days of 145, 165 being the median.
Yeah, that's about what it was when we started buying in 2010, 2011.
Right. Yeah, it's crazy how things go up. Well, awesome. Yeah, that was an interesting story. I've been there before, and I think we had one deal where I thought I was going to make $90,000, and I really hate it because it's one of those things where you could have wholesaled it, or even sold it maybe as is to someone to live in, and made $50K. And we thought, well, we'll make 90, we'll go ahead and rehab and stuff. And then we ended up, pretty much breaking even, I think is what it was on that one. But it's painful when you know that you could have avoided all the hassle and work and made so much more.
Yeah, so a motto that we live by right now is a fast nickel is better than a slow dime.
Oh yeah.
Right. So if you're gonna wholesale something and you can make, 5,000, it's better than going through a deal and making 10,000.
Right. Yeah, absolutely. And you take that money, turn around and get more deals with it. So.
Yeah.
So do you have any good books that you recommend? You mentioned that you first read Rich Dad Poor Dad. Is there anything else maybe that you've read recently, or anything that the audience would enjoy reading?
Yes, I read Blue Ocean Strategy. Is something I'm reading right now for business. That essentially is creating a niche in the market where there's less competition. So there's red ocean is full of sharks. They're eating all the fish. A lot of competitors. Finding a blue ocean strategy would be less competitors, tons of open space, a lot of potential clients, leads, and customers. So developing something to get into that blue ocean space. I listen to a lot of podcasts. I do Tony Robbins, FlippingJunkie, Bigger Pockets, things like that have been very helpful. And then my next book is the opposite of spoiled, which is I've got one son who's almost one and another one that's on the way. So the opposite of spoiled is kind of techniques on how to not raise spoiled and privileged kids.
Oh, nice. Yeah, I probably should get that. Although my kids aren't spoiled, I probably should still get it and read it to make sure that they don't end up spoiled. But yeah, awesome. Well, thanks for those. I hadn't. It's good to hear some new ones. I think I'd heard of Blue Ocean Strategy before, but I don't think I've read it, so I'll have to get that. And then the opposite of spoiled. I'll put links to those on the show notes page as well. But thanks a lot for your time, Chris. I know you're busy, and we really do appreciate you sharing all your knowledge and information to the listeners out there of the Flipping Junkie podcast.
Yeah, thanks, Danny. It's a great opportunity. Glad to be on the podcast, and I look forward to helping the people that are listening.
Yeah, and how can people contact you? What's a good way for people to reach you with questions or wanting to look at getting some loans and things like that?
Yeah, so you can email me directly. My email is cjameson, C as in Chris, JAMESON, like the whiskey, at sflending.com. That's SF as in single family, lending, LENDING.com. Or give me a call, 210-853-5777. That's 210-853-5777.
210-853? It was 853, and then what was the last four?
5777.
Okay, I'll make sure to have the link to your website and the phone number also on the show notes page at flippingjunkie.com/37. Well, awesome. I really do appreciate it, and we'll talk soon.
Thanks, Dan.
Another great episode of the Flipping Junkie podcast. Thank you, Chris, for all of the great information. And for everybody, you can get his contact info and all of the cool documents and things, the checklist, the repair estimate stuff on the show notes page at flippingjunkie.com/37, flippingjunkie.com/37. And you can get all of that info and show notes breakdown from the show. Have a great week, and we'll talk to you next week.